Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we got a stock market that's very positive, right? I mean, it's had a 17-year bull run, straight up the longest in history. I would say that it could be argued that we have extreme valuations from this 17-year bull market run that we've been in, right? I mean, the Buffett indicator, 210%. Normal's about 100%. Below 100 is cheap, right? But we're at 210%. That's a record, right? Record extreme valuations. Now, does it have a little more legs left? I actually think it does. I think they're going to try to keep pushing this up a little bit more. Now, why? Why do I think that? Because they're going to print some more money. I don't think they're done printing money. I don't think the Fed is done buying everything to keep the market propped up. You see, it's been an artificial market. The system broke in 2008. All they've done is print money, and that money needs to go somewhere. Where does the money go? It goes into the stock market, goes into the real estate market. They're going to continue to print this money. Now, I think we could probably get as high as 6,400 on the S&P. Now, I do think the Russell topped out. That's just my opinion. Maybe we get a new high, but I don't see that happening for the Russell. You see, the Russell, it's got all the smaller companies, where the big magnificent seven, that's in the S&P, and it's going to keep going up. 6,400. Bitcoin probably going to hit 120,000. This has a little bit more legs to it, but mark my words, not going to go on forever. I know you young people's all you've seen. Look at, let's say you've only been trading 17 years. Let's say you're 40 years or younger. You've only seen the bull market pretty much, right? You've never seen a bear market. We're going to have one again, and probably be the worst one in my lifetime. That'd be the guess. It's going to be extreme to the downside. See, we're extreme to the upside, usually follows by extreme to the downside. Now, I'm not so much worried about the stock market. I'm starting to worry about the bond market. Bond market keeps me up at night at that long end of the curve. Not the short end. The short end, they're manipulating it. The Fed keeps lowering the rates, and they're going to lower them into 2025 here. They're going to have rate cut. The Donald's screaming for rate cuts. He wants the Fed to cut the rates. But the problem is every time they cut the rates, cut it by 100 basis points, long end went up by 100 basis points. If they keep doing that, it's going to get real ugly real quick. Now, you're going to see the crash come in the bond market. When you see the yields starting to go up, I would be running for cover in the stock market. Stock market's going to come down when those yields start to creep up. You get that 10-year above 5%, that stock market's going to have a lot of problems going higher. This is just my take. Moon boys think we're going to the moon, and they may be right. You just never know. All right, I want to talk a little bit about, where the money is, how the money has been divided. Right now, the extremely wealthy people, the top 10%, well, they can control easily at least 90% of the wealth, right? And then the bottom 90% of the people, they fight over that 10%. But it's kind of fascinating here. It's actually the older people, the people my age, 55 and over, right? 55 and over. Well, we control 75% of the wealth in the U.S. is controlled by us older folks, 55 and over. Now, I feel sorry for the younger people because they're not where we were at that stage of life as when we were there, right? I mean, they keep pushing out first-time home buyer, almost 36 years old. Where did I buy my first home at? 21 years old, but that was unusual. But it's creeped up. It was down around 30, and now it's actually at about 36 to buy your first home. It's going higher. Why? Because the younger people do not have the money. Money's very concentrated with the older people. Now, how did we get the money? How did the old people get the money? Did we work really hard? Well, some of us did, right? I mean, you go out and you work, but here's the thing. It's where you invested. Because all assets were going going up, right? Because they sacrifice what? They sacrifice the dollar to make the assets stay up higher. Ever since you go back to, well, 1980, right? I mean, had 18% interest rates then. And all they've done is just cut them all the way down. They reached zero, right? So young people, how are you going to get the interest rates going down 18% in your lifetime? You'd be at negative 18%. And they would love to do that. Don't get me wrong. When they get the central bank digital currency out, they're going to do about 3, 4, 5% negative rates. But you really, to match the lifestyle that we had as the baby boomer generation, you'd have to bring rates down negative 18%. You see, when we bought the houses up here at 18%, they just cut the rates, cut the rates, cut the rates, cut the rates. And all of our assets, as they were cutting the rates, what were our assets doing? Well, that house that you could buy back then, the first one I bought was bought for $90,000. What's that sell for today? Over $2 million, right? Now, did the house go up? No, they just cut the rate, cut the rate, cut the rate, printed the money, printed the money, printed the money, destroyed the purchasing power of the dollar. And now you got a dollar that doesn't have any purchasing power. Very sad, right? So you young people, you have to deal with this now, right? We've had a great life and we've had a good run, right? Baby boomers had a good run. Now, anyways, basically the AARP, they did a study and 50% of homes are 70% of homes are owned by people over the age of 50. The older people own all the homes, all the real estate. 70% of all homes owned by people over the age of 50. Now, here's the thing, though. Here's the thing. 50% of those people over the age of 50 that own 70% of homes are going to be downsizing. They're going to be downsizing. Look, we don't need McMansions anymore, right? I mean, we're pretty much, well, as you get older, your kids move out of the house and you're an empty nester and maybe one of the spouses die off. So maybe you're even a single person living in a big house. You don't need it, right? So they're going to be downsizing. 50% of the people that own 70% of the homes are going to be downsizing. So basically, let's say 70% of the homes, 50%, 35% of them are going to be hitting the market relatively soon. And you see, these are people that they don't really care about the mortgage rate because they got all the equity, right? They're just a seller. They don't care what the mortgage rate is. They're going to be selling. They're going to be downsizing into either an old folks home or into an apartment or something smaller that they don't have to take care of the yards. They don't have to take care of all the maintenance. A lot of maintenance on a house. I used to be a house painter. I still love painting. I painted my own house just a few years ago. And I mean, I was well in my 60s, but I can still paint a house, right? It's kind of fun. I enjoy doing that. It's kind of weird, right? Because it reminded me of being a kid. I started painting houses when I was 15 years old. I wasn't old enough to drive, but I was old enough to walk next door and knock on their door and ask if I could paint their house. And I was tall, right? Tall Mike. They thought I was older than 15, so they said, sure. And they paid me about $300 to paint a house back then. It's a lot more to paint a house now, but $300 to a 15-year-old kid back then, oh my goodness, that was all the money in the world. It was fabulous. Loved doing it, still enjoy painting. But anyways, back to the story. Okay, so we got the old people, right? Anyways, 70% of the old people, okay, they own 70% of the homes. They're going to sell. Half of those people are going to be downsizing. So 35% of the homes that are available in the U.S. are going to be hitting the marketplace. And they have the equity. Now, they want to sell. They want to sell to you young whippersnappers, right? You young whippersnappers are coming up and you want to buy. You have the demand, right? But you do not want to buy at these high prices. And that's a problem, right? Well, actually, you can't buy at these high prices because you don't have the income to buy at these high prices, and you don't really want to be the bag holder as those prices come down, so you're putting it off. You're sitting and waiting, and that's why the average age of first-time home buyer went from 30 years to up to 36 years now, right? So you're putting it off because you don't want to pay 50% of your income just on your mortgage and the maintenance of the house. So there's a problem. There has to be an equilibrium found because a lot of the baby boomers, they're going to be hitting the market. 35% of there's not enough young people to suck these up, enough qualified to buy. Well, right now they aren't qualified to buy, but as the boomers start to lower the prices, and they will start to lower the prices, I say down 30, 40, 50%. You don't know where the bottom is. Once you start circling the drain, it's just a spiral down. But right now, it's a frozen market. I'll agree with that. Nothing's really moving. Transactions aren't moving. We'd have to go back to 1995 to find a time with fewer transactions. And I know our population has almost doubled since 1995. So you got the fewest transactions ever on recorded history for the number of people that we have. But the thing is, there has to be a meeting of the mind somewhere, right? I mean, you can't sell that $3 million, 1,200 square foot tract home, because there's no buyers anymore. We've run out of buyers. I know. I'm a real estate broker in my area. 1,200 square foot tract home with a 6,000 square foot lot sells for about $3 million. But we don't have the buyers. Not ones that can qualify. So there's going to have to be an adjustment. That adjustment's going to come down. I would not be shocked at all if that 3 million came down to 2 million, maybe even 1.5 million. And it'd still be overpriced at $1.5 million, to tell you the truth. I mean, it really would, right? I mean, originally these sold for probably $15,000, right? So at $1.5 million, that's quite a markup, and the house has gone over time. But I'm telling you that you don't want to be the bag holder. It's the most unaffordable time in the history of the world to go out and buy a house right now. But the thing is, the wealth it's concentrated in the U.S. Top 10% control 90% of the wealth. Top 1%, they're controlling about 80% of it. It's incredible. It's very concentrated, but it's also concentrated towards the baby boomers, towards the older generation, the younger generation. They got a lot to complain about, right? Because they don't have the money. But every 20-year-old kid will tell you that Bitcoin's going to solve the problem. And that kind of cracks me up, but they think it will. Maybe it will for them, right? Maybe if you're 20-year-old, you just put all your money in Bitcoin, you'll be fine. But it's a problem, right? The concentration of wealth is a problem. But I would say don't worry. I'd say get some popcorn, sit back, watch the show. As the older people, they're going to start to drop their prices. And the younger people, the ones that can afford it, the top level ones will be the first buyers, and then it'll just kind of adjust itself, and that'll be down about 40 to 50% from where we are. Now, a lot of people think I'm crazy. Every time I say that, they say, but Mike, that could never happen in my area. And I understand that. You live in that fabulous area, no death, no one loses a job. It's a wonderful area. No one gets divorced. That's incredible, right? But eventually, when people have to sell, that's where forced selling comes in. It's called forced selling because they can't either afford to pay their mortgage or because they're breaking up and they will sell the house at any cost just to get rid of the other person, right? And they divide up the proceeds from that, and that's how you get forced selling coming onto the marketplace. I do think there's going to be a lot of forced selling in the Airbnb market. The Airbnb people, you can take those courses online, right? I mean, you take the course and you learn how to go out and buy 10 of them. Buy 10 of those Airbnb suckers and rent them out by the day, right? Turn them into the motels. Well, a lot of cities are banning that now, and you got 10 of them. That's a problem, right? That's a problem. So you're seeing these Airbnb people, they were rushing to get into them. Now they're kind of rushing to get out of them. You'll see the inventory coming on. Yeah, don't get me wrong. It's taking longer than I thought it would. I thought we are coming down slightly nationwide. We're down about 5%. But I thought the downfall would be quicker than it is. But they managed to print the money to keep things propped up. You got to understand, the government keeps them propped up. They own $3 trillion worth of mortgages. Every mortgage out there, every mortgage, 85% of them are backed by the government. Isn't that incredible? Right? What if the government got out of the mortgage business? What if they sold their $3 trillion worth of mortgages? What if they didn't back the mortgage anymore and just let the rate go to where it may? Well, you know where it would go. It'd probably go 15% for a mortgage. That's why the government has to stay in and subsidize it for you to get that 30-year mortgage. No one's going to loan you 30-year mortgage money at the 7% it is right now. It would have to be at market rates, but they don't have free markets in the U.S. anymore. Everybody thinks that we have this capitalism thing where the markets are free. We are so far removed from that, it's That's ridiculous. Now, maybe Donald and the Doja Boys, maybe they can get that free market capitalism back into the United States, back into the mortgage market, back into the real estate market. We'll see how it plays out. But I don't see that happening. I see him manipulating even more. The Donald screaming he wants rates lower. Pretty soon he's going to scream that he wants the mortgage rates to come down. Maybe he's the one that'll be giving out the 1% mortgage rate. They could do that, just print money and give everybody a 1% mortgage rate. That'll keep your house propped up in nominal terms. See, everybody misses this point. There's nominal terms and there's real terms. In nominal terms, your house has been flat to down about 5%. Nominal terms. You price it against real money, price it against gold, you're down 30 to 40% already. And you're still dropping like a rock. Now, will it come down in nominal terms? That remains to be seen. Donald comes out with 1% mortgages. It's not coming down in nominal terms, but it's going to be beat over the head in real terms because your purchasing power is going to go away. I could see him sacrificing the dollar to save the real estate market, to save the stock market, to save the debt market. Sure, that's what they've been doing for since 2000, right? Since 1980, really, as they've been sacrificing the dollar, and I think they'll continue to do that. Anyways, if you like this stuff, give me the thumbs up, punch that subscribe button, get out to everybody, enjoy the day. I'm Tall Mike. Bye-bye now.